Hey guys, JD here. I just want to share a quick little deal that I ran into today, and then hopefully you guys can get something out of this. This particular case was a situation where I got in the door, found out the client had oxygen the minute I walked in the house, so I knew that immediately it was going to go to a GI case. When I went through my presentation to determine that he had existing coverage, he searched and searched all over his house, even though he just got the coverage. He could not produce the actual policy itself. My understanding is that it was a new policy, so they just hadn't sent it out to him yet, or he hadn't received it. So originally, he said that he had what he believed was a $30,000 policy, which, as we all come to find out, they often don't always have exactly what they think they have, and that's why it's important to get the policy out. So in this case, he didn't have the policy. Luckily, though, he was able to remember what company he was with, and in this case, he was with Lincoln Heritage, which is a captive agency, right, which only sells their own products. So in most cases, it's easy to beat those policies, especially if they're less than 2 years. And in his case, it was a modified plan, is what it turned out to be. So he had a 2-year waiting period. So he couldn't, again, find the policy. So he ended up calling up the carrier, getting them on the phone, getting the details of the policy, found out he had $10,000 worth of coverage. And then he had also showed me his bank statement showing that he was being deducted $159 for that policy. So easy enough, 70-year-old male, $159 for a $10,000 policy. So once I had that information, I was able to go to work to try to find something better for him. And again, because I knew that he was GI, I prefer to write with AIG for a number of different reasons. But here's how I handled the scenario, and this is what I think is cool about this. And maybe you can use this tip or trick for yourself, or maybe you have a better way of doing it. I'd be interested to know. Post a comment to let me know. But let me show you what I have. So if you take a look here on my screen, this is my insurance toolkits. I know a lot of people use that. I know a lot of people, or I don't know what numbers you guys start off with. I kind of typically go for 10 grand. In this case, that was the size of his current policy. So once I got this pulled up, right, I went to a guaranteed issue, and let's see what I found here. So prices are, well, I consider them relatively close, right, within about 10% or so. Again, my favorite carrier in this case is AIG, mostly because they do the Social Security billing, and because they follow that, makes your business a little bit more solid that way. And the fact that they have a very easy online e-app process, and they accept pretty much every single form of payment. So again, that's the reason why they're my go-to. Gerber is usually cheaper. I haven't written with them. I'm not sure what their process is like. I know the first policy has to be by paper, but anyways, that's besides the point here today. But once I get here, in case you haven't used Insurance Toolkits, you can shop different carriers. You enter, you select which carriers you're contracted with. You jump over here to compare, and now you're shopping with just that policy. That's an AIG with a guaranteed issue. Now, this is the trick part of it that I thought was pretty interesting. So what I did was, because I knew I could beat his rate, I'd already looked at the numbers and saw what that rate was. Or actually, I'll go back here. And so right here, you can see the 10,000 is 106, right? So I know he's paying 159. So I'm like, boom, we got a killer savings. But this is where I kind of accidentally ran into this technique of doing this today. So I went here, 10, 12, and 15. And the reason why I ended up liking it this way is because there's a reason. So let's take a look at what I have. So as you can see, he was paying 159. So we'll call this the same rate, right? 158 for 15,000. So I gave him one option with the same premium monthly, but increasing the face amount, right? In this case, 50%. So it's 150% of what he has now, 10,000 up to 15. So that's option one in my book. Option two, let's say you're comfortable with that 10 grand. I think he said he was going to be cremated, so obviously that'd be more than enough, and then to leave a gift there for his family. But then that's the biggest savings, right? So keep the same amount of coverage, reduce your policy. So that's option A, option B, or one or two, however you want to look at it. And then right here in the center, it's an interesting one. So what ended up happening was, this amount here is less than he's paying, but it's also more coverage. So again, first option here is keep paying what you're paying, but increase your coverage. Next option is keep what you are covered for and then just lower your payment down. And then option three in the center is where you save money on your monthly premium and you also increase your face amount value. And just as a little psychology trick, I'm sure you guys probably already aware of this, but I don't know what the numbers are. I haven't ran it, but the majority of the time folks are gonna pick this one in the middle. And this one, again, it just so happens to be, it's a savings from what they're paying and it's an increase in the coverage. So that was the little trick. So each one, I mean, none of these options in this case would be bad. I think we can all agree that, all three of those premium amounts or the AP there would be good, even though it's going to be a GI case, right? But more importantly, we're doing the customer benefit in that. Again, he had a brand new Lincoln Heritage modified plan. I had a 2-year waiting period. I think he was less than a month into it, hadn't even received a policy. So even though I ended up restarting that 2-year plan, it was within 30 days of that previous policy from what I'm aware. And I got to lower his payment, got to increase his face value. So I really feel like it's good business. In addition to that, as an agent, lowering the monthly payment, even though maybe I could have, another alternative would be to show this number that he's currently paying in the center and show him less and more. I think that's another strategy. But for me personally, he's already over $100 a month. I want to write solid business that I know that's going to stick around. And so lowering his payment a little bit, that's still a solid commission there. And again, it's still more coverage and a savings for him. So I just love that little trick. So anyways, hope that helps you guys out. And yeah, if it's not apparent, he did go with the middle one. In case you hadn't guessed that one, he did go with this center coverage right here, which I thought was, again, a good deal for him both ways. Post your comments below. Let me know if you think this is a great idea, or tell me what your strategies are or how you do replacements. All right, thanks.